Hello, hello. Welcome to April 21st Alphas KR at 51%. That was a bit of a pullback because we had 54 yesterday, which is really weird because the close here was 54 and now we're at 51. So this is the weird, strange world of options. But the bottom line is that we are still okay in the money. We're still in profit, and we are working on against that rock right there. Let me go ahead and change the cursor to a little more cleaner. Okay, so our plan is that we are now have this low here, and this low came out at 60, 86, 36.92, 92, and went to 36.82, which right there, there's no change until we get a dipper low again, or KR is able to pick up speed and cross the R close at the ROI 100. That said, that takes us now down to CBS. Now here is CBS. Uh, it's still short of the it's $3, not even $3. It's $2.56 short of his third ratio right there, and our ATR is $1.24. So it's getting close. It's like 3 days, three days. We maybe on a perfect trading world, we'd be able to cross that third ratio and start looking for an exit. CBS is running at $99 in profit only so far in this trade. All right, newcomer. This one here I'm excited to talk about because of the fact is it's a put. Yes, we have a put in the house, and there it is. Let me zoom in a little closer for the setup. Now recall, stochastic strategy works both ways. It is not an uptrend strategy only. And this is where a lot of traders get really messed up or lose money, is that when they see the market shifting, they don't have an opposing strategy to pick up on the opportunity of putting in option puts. Okay, so our scanner we ran yesterday, we had money in the coffers, and we ran the scanner, and we came up with a ATVI with a downturn. Also note that the third ratio is matching here to the price channel, my interim and low price channels. I did that on purpose. Why? Because of the fact is that this is showing that it has very strong support. So we're going to be fighting that support. Why? Just set up ourselves in position. Price gets down here, and we get ready to take the money off the table. Essentially, what I think is Wayne Gretzky, I think his last name is, the hockey player, and an interviewer asked him, says, "So what makes you the greatest player?" And his answer was, "I look to see where the hockey puck is going." He learns who he's playing against, who the shooter is, and he looks at the shooter's eyes, and the shooter's eyes tells him exactly where it's going to go. And then Wayne heads in that direction. And that's what makes him the greatest player. He doesn't chase the puck, he sets up anticipation where the puck might be. And his percentage is extremely high. Thus, therefore, makes him a great hockey player. The same with stocks and options. We see the downturn coming in here. We set ourselves up. Now we set ourselves up here for the 3-to-1 ratio. So we have an opportunity to get into a higher high because pardon me, I need to take a pause here. Now we're back. And the point comes down is that we want to have something realistic. I spoke about this before. Yeah, we can go ahead and take the ratio and go, oh, take this ratio and drag it all the way to the bottom here, and it puts it here. Now, has price been down at the $83 level? Not recently. I want to go back about 2 months, month and a half, and it has not. So the chances of it going down that low, unless we have a major spike down, it's not going to happen. So we want to set up the puck where it'll be realistic, and that's right there. And that is where, see, so the price came down here and came back up again. That means there's buyers are hiding down here. They like the 89.06 price. That's what this is what's telling us. The market fell, and remember, price falls because there are no buyers. When there are no buyers, the prices decrease and discounted and discounted and discounted until someone says, "Oh, I like that price. I'm going to grab it." It's the same as 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 you go shopping and there's a favorite item at Home Depot or TJ Maxx or anywhere that you're dying to buy something, and you know that there's an overstock. You know somebody saying, "Hey, we got way too much of this stuff in the store. We got to put it on sale to get it out." My daughter is a product placement person at a major company, and her job is to clear the shelves. That's what her job is. Her job is to go through and say, "How long has this been on sale? How long has this been on the up for sale?" "Oh, it's been here about 2 weeks. It hasn't moved, has it?" "Oh, we've got some here. Drop the price." She has that authority to with the higher ups. Drop the price, get that product off the shelf because I got a truck coming next week with more, or I have a new product and I need the shelf for the, or we're already in the spring season. I went to the 99-cent store and the end result was that the store section, like 2 aisles, are dedicated to the spring season. So the same thing is happening here with price. So price gets down here. The whole point of that story is when there are no buyers, price collapse, and when there's buyers, price rises. So right in here we have support. So we want to get ahead of that hockey puck and be able to pick up that money. So we get into the lower regions, and then we're going to look for the higher high, or if we hit ROI 100, it could very well happen. Then we look for that exit. So I'm sorry I got a little bit long-winded on that of the analogy, but that's what causes price. It's not necessarily a sell-off; it's a lack of buyers to keep pushing the price up, and then price finds a comfortable spot where somebody is sitting with hundreds of thousands or millions of dollars and saying, "I like that price, I'm buying in." So that explains that. So ATVI is a put in, is not going in the right direction at 17%. Looking at the closing time, I do want to bring something to your attention. CBS, we talked about that. AT&T is at 15%. Caprice hit 6, and AIU, which is one of our experimentation, is at 6%. What I want to bring to your attention is this. Look at that, 22.5 versus the SPY 11.3. So we are now going into the proof. So we'll crawl up our trusted calculator, and the closing price was 677. So 6777 minus the 5533, which is the benchmark starting on January 1st, resulting in 1244. Divide that by the 5533 as a percentage, and the result is 22.5%. 22 for price. Where is the market? SPY right there. SPY, my proof, 11.3 or 11.29. The bottom line is that winners become losers, and the stochastic strategy for the alphas at 22.5 is beating the SPY by at nearly double. Not quite, but nearly double. And with that said, we'll conclude today's report with losers become winners with KR at 51%, the stochastic strategy ahead and running at 22.5 year to date. Bye-bye. Thank you.